Hello, it's Cameron here again. I'm just going to be doing a quick video talking about the market in the last week. Basically, everything's just revolving around Russia and Ukraine and energy and oil. That's basically what's been going on. So yeah, just start off. Russia and energy. I'm not really sure where the market's going to go, and I'll get more into that a little bit later. But one thing I can see is that obviously energy and oil prices have been going really high. Yeah, so oil surging nearly $100 a barrel. Um, Oil's been doing really, really well, and I know Russia gets most of its income or a lot of its money from there. So I could quite easily see Russia just sitting on the border and just making a lot of money from this. Like realistically, I mean, I was sort of investing in energy ETFs a little while ago, and they've done quite nicely. But if Russia does just sit with troops on the border and that uncertainty continues over the winter, like energy stocks do well in the winter anyway, so I could quite easily see that happening, and they just make a lot of money off of that. Again, I don't really know anything about the politics or where it's going to go. Um, which is why I wanted to talk about a couple of strategies or which strategy I'm using to sort of hedge my risk against this. So, I mean, the first one was that I've seen people doing is, well, just pretty standard, just dollar cost averaging through it as normal. Um, I am not really a fan of this, mainly because I think it will go a lot lower at the moment. I think it's more likely that, I mean, it's essentially just hedging my bets on what I think Russia will do, but I do think the situation will get worse and there'll be some sort of border skirmish or invasion of Ukraine, that sort of thing. And if that does happen, I think it will drop another 5/10% briefly. Um, so I think at that point, that's when I'd invest. So that's what I'm doing. I don't hold anything in the S&P 500 at the moment. But when I do see something like that, that's when I'll probably invest quite a bit more, or dollar cost average over around 2 or 3 days. That's how long I expect the drop to last. And alluding from that, I found this, which was quite useful, which is basically a list of geopolitical events and the impact on the S&P from what happens. I wouldn't really know which one would be the most similar to this, but in my opinion, it'd probably be either like North Korea invading South Korea or Iraq's invasion of Kuwait. Probably that quite similar. I mean, Iraq's invasion of Kuwait is the worst listed one, but this sort of gave me a better idea of what to expect in the stock market. Um, so the bottom there it says takes 22 days from when the incident occurs. I think when I was reading more about it, it said from like the actual point of the incident rather than the lead up to it. And in my opinion, there has been well, I mean, there has been quite a big lead up, especially with all the uncertainty that's obviously taken a hit on the stock market. It's hard to tell with all the Fed action as well, but yeah, I thought this was quite cool to give you a better idea. I mean, 22 days and then 47 days average to for the recovery. So yeah, I mean, I expect it to be quite a drastic drop over 2 or 3 days. I do think a lot of the 22 days has been encountered um, into this one anyway. So yeah, but I something I did allude to is what the Fed's going to do. So basically, I think the Fed won't accelerate rates as fast if something does happen with Ukraine and Russia. Like, obviously, the markets are going to not be decimated, but they're going to be taking a very large hit. And I don't think the Fed's going to enact like I don't know, 4 basis points increase. I can't really see that happening. If the market's already getting destroyed, I don't think they're gonna want to raise rates again, because I think it will destroy the market even more. But we'll have to wait until the next Fed meeting for that. But yeah, that was a few interesting points I thought about markets this week. I'm going to still be holding my energy ETFs quite, but the still be holding my energy ETFs, but the rest of the things in other in the S&P 500 and the other things like the Nasdaq. I think the Nasdaq is down horrendously at the moment as well. I think from its top, it's like 18% down or something stupid. It's in official correction territory anyway. But yeah, that's what I expect to happen, and that's my strategy at the moment. Thank you very much for watching.